building relationships with the right people, people who have capital to invest. For example, small business owners, they understand the idea of business. They understand that money makes money. You got to put money in a business and you got to make money and invest and so forth. But when you're starting out, you want to understand the market that you're in.
You're listening to Flip Empire, the show committed to helping real estate entrepreneurs who want to build their empire without sacrificing their life. Your success and freedom starts now with your host, Alex Pardo.
This is episode 756, and you are about to listen to a masterclass with Nizan Mosery, who is the founder and principal of Multifamily, Inc., which is a company that not only specializes in multifamily and student housing acquisitions, but they're also dedicating in helping you get involved in commercial and specifically multifamily. So guys, on today's podcast, I am going to dive deep with Nizan about the multifamily asset class. You guys know, if you've been listening to my journey, what an advocate I am of commercial and just bigger deals, less deals. And we're going to dive specifically into the multifamily asset class. So why multifamily? Like, how did Nizan decide to transition from a single family investor into this particular asset class? Why does he love it so much? And then we're going to dive deep into market trends, how you can get started. What is the one key principle? What is the one thing that you need to do if you're not involved in multifamily now so that you can be and you don't need to be all things to all parts of the deal? That's just a little bit of insight right there. And we're going to go that much further with multifamily and all things related to this particular asset class. So guys, before we get going, as I always share, right, I want you to listen to this from the perspective of what can you take? What is the one piece of insight, the one nugget that you can take and apply to your business, whether you're interested in multifamily or not? And then lastly, for those of you, I've had quite a few reach out wanting to get involved or wanting to at least learn more about our Storage Wins community. Head over to storagewins.com. Just take a minute or two to apply. And if I like what you have to say, we'll go ahead and invite you onto a call so we can discuss and see if it's a fit. Storagewins.com. So guys, without further ado, let's dive into episode 756 with my buddy Nizan. Welcome, everybody. This is Alex Pardo, and I'm really just looking forward to the conversation I'm about to have with a new friend, Nizan Mosery, who is somebody who I got to know in another community that I'm a part of real estate investors, thought leaders, educators, all just aiming to grow so that we can help more people. And my new friend here is an expert when it comes to multifamily and student housing. And as you guys know, if you've been following my journey over the course of the last 3.5 years or so, I am a big advocate and proponent of commercial real estate. In my particular case, self-storage. With Nizan, it's multifamily and student housing. Either way, one common thread that I have found with a lot of successful investors is oftentimes I see them transitioning from single family over into commercial or adding on these particular asset classes in conjunction with their business, but very rarely have I ever seen somebody go the reverse, start with commercial, then transition into single family. So this isn't necessarily going to be a conversation about which asset class is better, but just more to expand your mind. And if you are thinking about getting involved with commercial real estate, why multifamily and or student housing might be a good fit for you, and how you can start to think about it. Because one thing that I have found in my storage business is a lot of the skills that I acquired as a single family residential investor have translated over into storage. So with that being said, brother, it is great to have you on the podcast, man. Thanks for joining.
Hey, Alex, pleasure to be here. Thank you so much for having me.
Yeah, no, absolutely. You know, I have a lot of respect, man, and admiration for people that put themselves out there. You've been providing a lot of really good content on Facebook and your Facebook group and just in social media in general about this asset class, about multifamily. So I want to start off. I'm gonna zoom out and throw a big general question out there, and then we can start to dive in. But why multifamily? Like, what was it about this particular asset class that compelled you to really get involved and dive in?
That's a great question. So I'm very lazy. I don't like to work a lot, and I wanted something. I was looking getting in real estate, I was, like many people, I started fixing houses and wholesaling and doing all that kind of stuff. And, because that was a lot of the low hanging fruit. And that was something that you kind of look at it and go, yeah, it's fairly simple, right? Nothing is really easy, but it's simple, right? You buy a house, you work your numbers, figure out what your expenses are and what the comps are and so forth. And, and you create a buyer's list and a seller's list. There's a lot of work involved in it as well. And when I moved back to the States in 2009, that was the lowest hanging fruit in the market right now. Single family homes, right? I live in South Florida, and I was buying houses for $16,000, 3-bedroom, 2-bath, concrete blocks. So that was the lowest hanging fruit. But after a while, I realized that I would buy a house, I would renovate it, and it would take months until I would go and finish the renovations and then selling it and so forth. And then I'd have to sell it. And then once I sold the house and I made my money, I would have to go out and find another house and do it all over again. And it was time consuming. And if I didn't go out and find the house and renovate it and do all that, I wasn't making any money.
Yeah.
So I wanted to find something that I could do once and it could feed me over and over again, right? Hence comes the laziness aspect of it, right?
Yeah.
I wanted something that I could generate, that could generate income without me having to work at it constantly.
Yeah.
And I remember growing up as a kid, my father used to tell me, he goes, son, there's two types of people in this world, those that pay rent and those that collect. And you always want to collect. You always want to be on that collection side.
Yeah.
I remember when after living in Israel for a while, I came back to the States, and I was living with my parents because I didn't have a place to live. And at one point I went and rented an apartment in Manhattan, and my father got pissed at me. He goes, didn't I ever teach you anything? You're renting. You might as well just take the money and burn it. Just throw it out the window. You're not building any equity in it for yourself. What are you doing? What are you doing? I looked at him. I said, give me $1 million and I'll go buy myself an apartment. I have no problem with that. But right now I have to rent.
Yeah.
And that's so many people out there is renting. And so I started looking, and I started, small. I started with a duplex, and then I went into a 4-unit, and then, I was telling people what I was doing, and because I was known as the flipper and the wholesaler, and just like a lot of people. So I would tell my hard money lenders, my private lenders, my friends and family, everybody that I knew, that I was getting into multifamily and how they could help me. If you know anybody that's looking to sell a property, a duplex, a 4-unit, 10-unit, 20-unit, whatever it is, let me know. If you know anybody who's tired of the stock market and all that craziness, and who has money in their self-directed IRA or in a 401k, and they want to put it in something that can generate with more stability, right?
Yeah.
More mitigated risk, I would say, turn them on to me. And that's how I slowly started building. But I got into it because of the passive income. We call it mailbox money, right?
Yeah.
Right. Every couple of months, you go into the mailbox, boom, it comes into. You get a check, you go deposit it, right? Today's world, you don't even get checks. It's direct deposit into your account.
That's
so
right.
You get a notification on your phone. Bing, money went in. You're like, all right.
I love it. I love it. Man, there's so much to dive into. And one thing that I really want to just shine a spotlight on that I think is a common thread with anybody that has achieved any level of success is you were bold and you went out there, you were proactive, and you started telling people, hey, I'm involved in multifamily. I'm looking for deals. Essentially, what you were doing was planting seeds. And that's one of the things I encourage my storage coaching clients is I always say, whether it's storage or multifamily or whatever asset class you're involved in, when people think of that particular asset class or niche and they don't think of you, you haven't done your job. Right? Your job, I think, is to enter the conversation, going inside the minds of your network, your prospect, friends, family. So when people think of multifamily, like they should be thinking of you if you're interested in that asset class. And so I just want to underscore and commend you for going out there and planting seeds, because when I look back at my career, brother, all the deals I've done, there's been quite a few that came because I let people know what I was doing, whether that's on social media or in networking events or just talking to people, letting them know what you do. So I think there's something to be said for being humble, but don't be so humble to the point that nobody knows what you're up to and what you're looking for, because then how can you collaborate with people and how can they potentially get involved in your deals? So taking it a step further, brother, I'm putting myself in the shoes of somebody listening who has done some single family, they've done a bunch of deals, or maybe they're just getting started in the business, and they understand conceptually that going bigger as far as deals and commercial makes sense, right? You have economies of scale, you have, the mailbox money you talked about, you can build wealth faster. But there's two common limiting beliefs that I hear that I kind of want to hear your thoughts on. Number one, people tend to think that they need hundreds of thousands, if not millions of dollars to get involved in commercial, whether it's, again, multifamily or storage. And the second one is that it's intimidating. Like, where do you get started? Like, what's step one and how do I not get burned? So can you kind of address those two common challenges or objections that I often hear from people when they talk about getting involved in commercial?
Yeah, sure. Absolutely. It's a great question. So, when I started in multifamily as well, they don't teach us this in school, right? We're not educated on how to use money, on how to use debt properly, on how to use other people's money. So when I got started, I was looking at it and going, okay, I only have a small amount of money in my bank account. How am I going to go out there and do it? And I remember as a kid walking down the streets of New York, right? New York City, looking at all these big skyscrapers going, who in God's green earth has that kind of money to go out and build and own and buy these things, right? And the Empire State Building was bought through a syndication, right? So when I started going and learning about multifamily and commercial and going big, I was worried. I said, maybe my career is only limited to the amount of money that I have in my bank account. So I got to turn that money fast. And then I heard this concept about using other people's money. And just like you help and you coach people in self-storage and whatnot. And I coach people in multifamily. I had a client of mine, social worker, right? Doesn't really know much about real estate. In 2008, he thought he was buying a great property and then it crashed, borrowed money from his friends and family, lost it all, really didn't know how to get back into real estate, had, this big myth on his shoulders, like, oh my God, I lost their money. I could never do it again. And, this whole thing. And I shared with him the concept of other people's money. I said, you don't need to buy a huge property. You can go out and buy a duplex, a triplex, a 4-unit property. You bring in a hard money lender, and then you bring in what's called a private lender behind it. So he went and he found a 3-unit property. He did exactly what I told him. He found a hard money lender to loan him like 65, 70%. And he got another private lender to come in and fill up the rest of the amount of money that he needed to purchase this, because it was undervalued.
Yeah.
So there was a lot of equity in the property. So he went into this property with no money down, out of his pocket. He bought the property. He used other people's money. And then he started renovating and occupying the 3 floors. He held it through COVID. And then after COVID, he sold it, paid back his investors, his money lender and his private money lender.
Yeah.
Took the money that he made, the profit, paid back all of his family, back the money that he owed them, and paid off all his credit card bills. And it was because he had that mind shift of, wait a minute, I could use other people's money. So you don't need your money to go out there and do deals. I mean, thank God, my team and we just bought a $21.5 million property in Athens, Georgia. I invested my money in that deal because it was just a great opportunity.
Yeah.
But we went out and we raised capital from our investors for the earnest money deposit. We raised money for the inspections, for the third-party reports. Then we went out and we raised, a total of $8 million from other people to come in and to buy the property. My duplex, $75,000. I got my friends to come in and invest without any money in my own pocket.
Yeah.
Right. I went out and bought a 27-unit. I actually flipped 27 units. We used other people's money to put the down payment. And then we found another investor and we flipped it. So you don't need to have your own money going in. Now, does it help to have a little bit of your own skin in the game? Yeah. It does, but it's not necessary, especially when you're getting started.
Right.
You can go out there and you can find a good deal that is undervalued, right? And we call them value adds, right? Where you can go in and add value to it, renovate the interior, renovate the exterior, push the rents up, right? There's something that you can do to that property. But you can go out and you can find duplexes, 4 units, and use and go out and put what we call, the business plan together and show your family and friends, go, hey, look, this is what we're doing. It's real estate. Even if real estate tanks like it did in '08, guess what? We're way past 2008.
Yeah.
We're way, right. The prices have gone so high now, the equity. So there's a lot of ways that you can do this without using any of your own money.
Yeah.
And it just takes that mind shift of saying, okay, well, let me figure out how to do it. And, like yourself, Alex, right? We're there showing our clients and opening doors and giving them connections, going, okay, talk to this lender. Here's a private investor. Maybe some of my investors would be interested in something like that.
That's
You
right.
just got to go out and you got to find the right opportunity, the right deal. And even in markets today, in economies like today, you can still find great opportunities out there. I hope I answered the question.
No, absolutely. I was just going to say there's so much wisdom in everything you shared. And I would double down, triple down on all your sentiments. One of the things I always share with clients is focus on finding the right deal, the right opportunity. And there's no shortage of capital chasing these opportunities, right? Now, with that being said, what are some, for anybody listening or watching this that hasn't gone out and raised capital, right? What would you say is step 1, 2, and 3 for people to how do we need to think about raising capital? And then what are some practical steps they can do? Because before you answer, I truly believe that for 99% of people, they have all the money they could ever need inside their contact list on their phone, right? But it's how do you approach the conversation? How do you frame it as an opportunity for others versus begging for money or chasing the money? So talk to us about the mindset needed to raise private capital to get involved in these deals. And then what are some practical steps that you might advise people actually go do?
Yeah, sure. Great question. Again, and I like what you said. We're never begging people for money. We're never asking for money, especially when you're out there raising capital. And what I've noticed a lot of people is that when they have a property under contract, that's when they'll start going out there and talking to their network of people.
Yeah, too late.
Right? That's too late. Right? That's already, the ship sailed because you've got 17 other things you got to focus on.
That's right.
When you've got a property under contract. So while you're building your business, while you're building relationships with brokers and you're analyzing properties, that's when you should be talking to your network of people. And it's all about building relationships. Building relationships with the right people. What does I mean, the right people? People who have capital to invest. For example, small business owners, right? Mm-hmm. Who in your network is a small business owner? They understand the idea of business. They understand that money makes money, right? You gotta put money in a business and you gotta make money and invest and so forth.
Yeah.
But when you're starting out, you want to understand the market that you're in. Okay. I have this triple P method I call to capital raising, right? It's people, process, and product. So the first P is people. Who am I? What am I doing? Right? I'm the person, right? So people have to know, like, and trust me, right? We've all heard that before. And like you said, you got to go out there and talk to people, tell them what you're doing, mm-hmm. why you're doing it, and the process and everything that you're going through. Understanding who your avatar is, right? Because I remember when I got started in this business, my coach told me, go to 2 networking events a week, get business cards, and start building relationships with those people. Man, I got boxes and boxes of business cards that didn't amount to anything because, first of all, I didn't know how to nurture those relationships.
Yeah.
But I also was talking to people that maybe didn't have the extra capital, didn't understand what I was doing and so forth. So the first thing that you want to do is find people who maybe invested in the stock market. They have some self-directed funds. They have 401ks, right? They've got money sitting aside and they're probably or possibly looking for other avenues to go into, put their money to work for them. The other part of the people is your team. When you're getting started, like me, I was by myself and people knew me as the single family guy.
Yeah.
Nizan, what do you know about multifamily? So then I went and I partnered up with people that were doing multifamily. And I said, well, you know what? I may not know everything. However, my team and these people that I'm partnering with, they have an incredible success track record of multifamily. And I'm working with them on this particular project right now. So that gave me credibility, right? That I wasn't alone, that I wasn't the Lone Ranger. I had a team around me. Now, if you don't have a team and you want to get started, it's okay. You can still do this. What I would recommend is understanding what city you want to buy in, why you're there, understand the market trends, right? Where in that city is a good place to invest in. And the reason why is because when you're talking to people, you want to educate them. You want to share with them what you're doing. See, for example, when I go out and network, I never tell people, hey, Alex, nice to meet you. I'm a real estate investor and I'm looking to raise capital. Do you want to invest?
Yeah, that's the way to push somebody away, right?
Absolutely, right? That's not the way to go about doing it. But what I do is when I go out and network, I go, hey, Alex, nice to meet you. Yeah, what do you do? How long you've been doing it? And I'm taking notes on your business card and I'm making mental notes, so, and then afterwards, I'll take even more notes after we're done talking. But I want to know what your interests are. I want to build commonality. I want to build a rapport between us. I want you walking away from our conversation going, that's a cool dude. I'd like to get to know him better. I want to get, talk to him. I want you walking away feeling good.
Yeah.
After our conversation. Right? Because then when I call you a week later and I'm on the phone, hey, Alex, how are you? How's it going? Remember me? Need something? You go, oh, yeah, that's right. Great conversation. And I'm still talking about you and your needs and what your goals are and what your fears are. And all I'm doing is asking you questions.
Yeah.
The Wolf of Wall Street, right? He has that thing, right? Sell me the pen, right?
That's right.
And what do people first do? Hey, this is a great pen. It writes upside down. It's blue. Yeah. What does he say? It's not about the pen. It's asking you questions. So when was the last time you wrote, you used the pen? Do you use pens constantly? What kind of pens do you like to use? Do you use pens to write contracts, to write checks, to asking questions?
It's like what a doctor does, right? Like we have knee pain or whatever, back pain. You go into the office, they don't just like write you a prescription. They ask you like, what happened? What are you feeling? Where does it hurt? It's the same exact thing here.
Same exact thing. What are your goals?
Right.
So how long have you been doing what you're doing? Oh, do you like what you're doing? What could you do better? How could you, you got kids. What are some of your goals for your children? Do you see yourself working till you're 65, 70? Do you love what you do? How long have you been doing that? Right? You get all this information from people because then once you have a property and a contract, then I can talk to you in your language. I can share with you why this would be a great opportunity for you. I never use the word deal, right? I never sound things. It's always an opportunity.
That's right.
I use this, hey, I've got an opportunity here for you to be able to create passive cash flow. And then we're going to do some bonus depreciation. So you might be able to write some of that off on your passive income. You can leave it to your kids. You can create generational wealth, all these different things. But I'm offering you the opportunity to come on an incredible journey with us with this project.
Yeah.
So I know I'm talking, it seems like we're talking a lot, but the initial point of contact is, hey, Alex, how can I help you? What are you looking for? What are you doing? It's all about you. Forget about me.
Yeah.
If I build that relationship and that trust, and I show you later on that I have a good team and we know what we're doing, you will come to me eventually and ask. And I have a great story, and we can move on from that. I was working out at a CrossFit gym and we had a class, and we just started with that class, and there was a guy my age, and we started talking and this and that. And I was asking, so what do you do? Oh, I have a palm tree company. Oh, are you a landscaper? He goes, not really a landscaper. I deal with exotic palms and a special type of palm tree. Oh, wow. So you're a niche, right? You're a specialty. You're in the specialty stuff. He goes, yeah. I go, do you have 1 truck, 2 trucks, 5 trucks? Well, we go from Broward all the way to Jupiter. It's a big area and this and that. I'm like, oh, wow. So I'm getting all this information from. What am I getting? He's in a niche industry. So, people are calling him. He's probably charging a premium for his service. He's got a big area that he covers. So he's a business owner and he understands and whatnot. I never once told him about what I do.
Yeah.
Because it wasn't about me.
That's right.
It was about him. How long you been doing that? Wow, that must be great. How did you get into that? All of this stuff. And we kept building that rapport and that relationship. And then after a while, he says, well, what do you do? I go, don't worry about it. Tell me more about these palm trees. What kind of palm trees? I've never heard. I thought all palm trees were the same, right? I'm letting him now educate me on his business. He's talking, he's sharing. He's like, wow, this guy's interested in me and what I'm doing. Yes, I'm interested in you and what you're doing. Make a long story short, I eventually told him what I was doing, that I'm buying multifamily and this and that. He goes, you know what? That's funny because my dad used to own real estate here locally, and I want to get into it as well. I go,
Wow.
dude, that's great. You know what? Real estate is a great game, blah, 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 blah. Never once did I pitch him
Yeah.
to come and invest with me.
Mm-hmm.
Eventually, he came to me, he goes, so what are you working on right now? Do you have any, like what kind of deals do you do?
Yeah.
I go, it's funny that you mentioned that. We've got a property under contract just north of Atlanta. And blah, blah. He goes, oh, that's where my wife is from originally. Oh, no kidding. Really? He goes, you got any information on that? I go, you know what? Text me your email. I'll send it to you. Boom.
Yeah.
That guy now has invested in multiple deals with me.
Incredible. So that came from you. Like, you can meet. This is what I share with people everywhere. Like, be curious, be open, seek to connect with people. You were at a CrossFit gym in a class, and you met a guy that now you've done deals with, like, it sounds like multiple times. And by the way, what I'm hoping everybody heard there, Nizan, is that the reason this was effective is because you showed a genuine interest in what that person was doing, right? Like, there wasn't like some underhanded thing. Like, you weren't worried about what you were going to say next, or when you had an opportunity to pitch something. You were just genuinely asking questions. You were intrigued. And then naturally, he's going to ask you what you do, and you just start building a relationship. I've always said that knowing how to raise private money isn't the most valuable capital. The most valuable capital is relationship capital. And I would argue with anyone about that. So just seek to connect with people, plant seeds, be curious, be genuine, because if you're not, it's going to filter through. People are going to smell it. So man, that's really awesome that you shared that. I appreciate that. Hey there, stop. I promised to get you back to the show, but let me ask you a couple of questions. Are you happy with the money that you're making in your real estate business? Are you generating any cash flow? Are you building wealth? Do you feel like you're making progress, or are you just constantly chasing deals and going after the next transaction and the next transaction? Well, I can tell you from personal experience that there's an easier way, and it's not with single family homes. I believe that self-storage is the best asset class in real estate, hands down, because we're not dealing with tenants, toilets, there's automation, it's a recession-resistant asset class, and it's a business that has the benefits of real estate. If what you're ultimately after is cash flow, building wealth, and time freedom, I want to invite you to just take a few minutes to apply. Go to www.storagewins.com, where you can learn more about our Storage Wins coaching program. And I can help you generate cash flow from your first storage facility within the next 6 to 12 months without needing to use your money or even needing any experience. So head over to www.storagewins.com. And if we like what you have to say, we'll schedule a call. And I look forward to connecting with you. Now back to the show. I want to kind of transition. You said something about market trends, right? What are your thoughts on the current trends in multifamily, and how are you seeing them impact investors? Obviously, we're in a particular economic and political climate now, and this isn't to turn the conversation into like a political type deal, but how are you seeing the climate we're in impact multifamily, and what are some of the current trends?
Yeah, no. Interesting question. So, as interest rates go up, right? Properties tend to become cheaper. Cap rates kind of go up as well, right? Because money is becoming more expensive, right? So as money becomes more expensive, we can't buy the properties at that same price point. So, we have to see prices go down. However, sellers till today think that we're still in, post-COVID, 2021 markets, and they can ask for what they want. And a lot of people during those times when interest rates were, 2%, 3%, they were going in and buying properties at a 3 cap rate, which means very, very expensive. The cash flow was very, very thin. And now that the cap rates have gone up, where we're seeing prices are coming down, the equity is being wiped out.
Yeah.
So there's a lot of opportunities coming to the market now in distressed assets. A lot. It's always a good time to buy.
I agree.
Always a good time to buy. You just have to be conservative. You have to understand what you're getting into, right? Variable rates screwed a lot of people. People thought, oh, you know what? Okay, variable, it won't go up that much. And then the Fed went and raised the rates, and some, they're still raising the rates a little bit. that really screwed a lot of people.
Balloons
Okay.
too, right? 1, 2, 3 year balloons where people just didn't
Absolutely.
anticipate it. Like they snuck up on them. And now like there's a lot of distressed assets as a result.
Right. So today, what we're looking for is we're looking for cash flow, right? To get the appreciation, right? We're looking for cash flow because we want to get into a property that's cash flowing, right? Because of the market instability, because of we don't know what's going to happen and where we're going to end up. So if your property can cash flow today out of the gate, you're well off, right? Now, if you're buying at a 6 or 7% interest rate and you're able to cash flow it, that's fantastic. You can go in, you can buy the property, start cash flowing it. And if interest rates drop a point or point and a half, and then you can refinance, you just made even more money because now your mortgage payments are going to be that much less.
That's right.
So you have to understand your market. You have to understand the city, right? For example, every city is in a different place on that market cycle, right? So, markets will expand and then they'll contract. They'll expand and they contract. It takes about 15 years, right? 2008, they contracted. People lost, jobs lost, right? Property values went down. 15 years later, this is where we are, right? We're starting to see that same trend again, right? So from 2008 up until now, prices were going up, 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 right? People were thinking, oh, this is never going to end. It's great, it's great, it's great. And now things are starting to soften a little bit. But it depends on the market, right? It really depends on the market because there are some markets out there that are still booming. There's a lot of people moving to those markets, cost of living, right? Now, with that, you have to be able to transition and move with the market. And this is kind of, you mentioned about student housing and multifamily and whatnot. So we went from buying value add C properties to buying value add A class properties because a C class property was trading at a 5 cap and an A class property was trading at a 5 cap. So why would I go out and buy a 1970, 1980s product when I can buy a 2020 product for the same value? Right?
Yeah.
Now, I don't have to put a lot of work into that 2020 product. All I have to do is take care of management, maintain it.
Yeah. You're not going to have as much deferred maintenance. It's just going to be a cleaner asset. Right.
Absolutely. And that asset is going to retain its value a lot longer than the older property, right? Because as the market softens, guess what happens? The C class property, the 1970, 1980s is going to go from a 5 cap to a 6, possibly back up to a 7 cap.
Yeah.
Your 2020 product or newer or whatnot, your class A is going to maintain that same 5 cap, maybe 5.2, 5.3.
Yeah,
but
it's going to hover
in that range, right? So you have to understand your property, your asset class, but you also have to understand what city you're buying in and where is that city on that market cycle, right? Is it at the top of the market cycle where it's a hot market and it's a seller's market, because understanding that will determine your exit strategy, right? And when we're buying a property, we always buy with the exit strategy in mind first. How am I going to dispose of it? When am I going to dispose of it?
Right.
Right? How long am I going to hold this property and what am I going to do to it? And then who's going to be my buyers when I go to sell and what cap rate am I going to sell it at and so forth and so on. So we're always looking at the exit first and then we play it back. So if I'm at a market that's just coming out of the bottom, I'm going to hold it. My exit strategy is buy, hold, renovate, push rents several years, push.
Ride that wave.
Ride that wave until guess what? Brokers start calling you. Hey, Alex, you want to sell your property? Hey, Alex, you want to sell your property? And you're going, I don't know. Give me an offer. All right, we got this, we got that, we got this, right? Now, if you're at the top of the market, you don't want to hold for very long. You want to buy, prove that upside, renovate a couple of units, show the new buyer that, hey, you can push rents to this much and then dispose of that asset, sell it quickly because you don't want to hold on to it as the market starts to soften and go down. Right. So knowing where you are really helps understand your exit strategy and what you're going to do to that property.
Nizan, are there any resources, websites, anything that if people want to really start to understand market cycles for multifamily or whatever asset class they're focused, is there anything in particular, publications, resources, books, anything like that you would say, hey, look, this is generally speaking like kind of where I go to research different market cycles and or what specifically are you looking for in certain market cycles?
Sure. Yeah, absolutely. There are some reports, there's the Milken report. I think it comes out either in December or January, where it shows the top markets and what they're doing. So I like to look at that. I like to look at one-way destinations. So, the different moving trucks like Ryder, U-Haul, they cater to different demographics of people, right? So depending on who you're looking for as your demographic of tenants, you can go to uhaul.com and type in U-Haul one-way destinations for millennials or for people making so forth, so much and so forth. And then look in that direction. I like to also Google top 10 job growth markets.
Yeah.
Right?
Path of progress.
So job growth is the holy grail, is the number one key factor that we're looking for. Right. So once I Google that and I look at the top 10 markets, then I'll call the economic development committee of that city. I'll call the chamber of commerce and I'll ask, who's coming in? What big companies are moving in? What factories? What is Amazon coming in? Is Walmart moving in? Right? Who's coming into that market? Right? Is Tesla opening up a manufacturing plant? What's going on in your market? What jobs are being created? So, for example, here in Boca, we have a very strong economic development committee. And I know the woman that's been running it for the last 15 years. And she has just been exploding what's going on here. We just had a record sale of a house on the Intercoastal, $40 million. And guess what? They're going to tear it down to build something even bigger.
I believe it, man.
Why? Because she's been bringing the top 500 companies into Boca. So you got all these high-end executives that are coming in that want to live here.
Yeah. So
she's driving the home prices up, the value up of that, right? We've got FAU, Florida Atlantic University, which is literally 2.5-minute drive from me. This year, they had 46,000 applicants. They don't have enough student housing to house all the students, so they're putting them in hotels. So it's supply and demand. So when you're talking to the Economic Development Committee, you want to find out what's going on here.
Yeah.
Where is the job growth happening? Where are they building? Who's moving in? What tax incentives are you giving to businesses and factories to come and to put their headquarters here, right? And then you can also call the city hall and ask for the city master plan. They'll give you a drawing or they'll send you to a website and you can see where they're looking to build and gentrify and move.
That's a great tip right there for everybody listening. I hope you guys rewind the last couple of minutes and listen to some of the things that Nizan has just shared with you that you can look for. Essentially, what you want to do, the way that I would summarize everything that you're sharing, is you want to put yourself in the path of progress for obvious reasons. Like you want to see where's their job growth, where are their companies coming in, put yourself in. If you can find an opportunity, if you can find a multifamily property in the path of progress, that's how you can potentially start to ride that wave up.
Absolutely.
Awesome, man. Well, brother, as we start to wind down here, I have one question I want to ask you, and then we're going to start to wrap this up. Before we do that, where can people connect with you? Like I mentioned at the top of the show, you have a Facebook group that you launched some time ago, and you're putting out a lot of content as far as multifamily. Where are some of the places people might be able to reach out to you?
Yeah, great. Thank you so much for that. So the Facebook group is called Multifamily Inc. So, feel free to join that. And you can go to my website, www.multifamilyinc.com. And if you want to work with me and learn more about that, you can just put a / and application afterwards. There's an application in there. I read all the applications personally. And then, if I see that there's some commonality and I can help and assist you getting into the next level, I'll reach out to you. So yeah, www.multifamilyinc, that's multifamilyinc.com.
That's awesome, man. Yeah, guys, highly encourage you to connect with Nizan. He knows his stuff and he's doing some really cool things in the multifamily space. So let me ask you this. You've been involved in real estate. When was it that you first got into the game?
Oh, so yeah, long time ago, man. When I was a little kid, my dad bought a property in New York City, and I was, he would tell me, go fix the elevator. I'm like, dude, I'm 14 years old. I what? He goes, yeah, the elevator, go fix it. I don't know how to do it. He goes, figure it out.
He taught you how to
I'm
be
like, okay.
resourceful.
Yeah. And then, I would spend the summers, retarring the water tanks and whatnot, and knocking down walls and doing all that kind of stuff.
Yeah.
And slowly I learned from the inside out. And then with my brothers, we went out and we started buying more properties in New York, renovating them, fixing them. We just leased 2 of our properties for a 99-year triple net.
Wow.
And then I went and I bought properties in South America and in Israel. And then, in 2008, when I moved back here, I started going back and buying more properties. And I've owned properties almost, a lot, many states in the country.
Yeah.
But, I started off small. I started off just like everybody else, a lot of fear, a lot of not knowing. I found myself a coach and a mentor, someone like you that, showed me how to do it and whatnot. And, I wish I knew today what I knew back then. I would have done things a lot differently and moved a lot faster. So having a coach and a mentor on your side, on your team, yeah, it costs money, but you know what? They're going to save you hundreds of thousands, if not millions of dollars from getting into a bad deal, from losing investors' money. It's not about getting you into a right deal. It's about keeping you out of a bad deal.
Oh, that's so true, man. That's so true.
Right?
I'll share with you this really quick, and then we'll wrap up the show. I've closed, and I'm always hesitant to share this number because it's all relative. To some people, that's nothing. To other people, that's a lot. I've probably closed north of 750, 800 transactions in my career. And the only reason I share that is because from time to time, people ask me, like, of all those deals, Alex, like, what's the best deal you've ever done? And the first time I asked that question, I started to think about my most profitable deal. And then as I reflected and paused, you want to know what my best deal was? In 2007, Nizan, I decided it was a good idea after wholesaling for about 1.5 to 2 years. I thought it was a good idea to get involved in my first luxury fix and flip. Well, long story short, 2007, 2008, you know what happened? Between myself and a partner, we lost $102,000. I lost $51,000 of my own money 2 years into my journey. Thankfully, that didn't put me under. But to this day, that is my best deal. Why? Up until that point, I always saw coaches and mentors as an expense. I said, you know what? I don't need to pay that $5,000, that's what it was at the time. I'll figure it out. Like, I've done some deals. I'll continue to figure it out. What you said is so wise. Had I had a coach or mentor at my side, they would have kept me out of that deal because I don't know my own blind spots. And that's what a good coach does. Is they're able to show you the blind spots and give you a roadmap. So 100%, man, could not agree with you more. Guys, head over to multifamilyinc.com to connect with Nizan. Brother, any parting thoughts here, man? I really appreciate everything you shared.
Take massive and immediate action. That's one thing, you can have a lot of knowledge. You can read books, listen to podcasts, YouTube University. But if you don't take action, you're not going to do anything. And yeah, a coach, a mentor costs money. But my question that I'm going to leave your listeners with is, if you want to become more and you want to do more, you're going to have to become more, right? You're going to have somebody on your team who's already done that and been there. What you've done up until now has gotten you where you want to go and where you are today. So if you want to achieve more, you got to go more. And all the great athletes, everybody, all the great superstars, the great actors and actresses and singers and songwriters, they all had coaches. They all had coaches. And it's just to tweak you, to take you a little bit and make you a little bit better and a little bit better, because you've already got the God-given talent. You just got to now tweak it and make it better.
That's right. That's right. Thank you so much, man. Super grateful to host this show because I get to connect with guys like you. So my friends, I appreciate you supporting the show. Make sure that you're subscribed so that every single Monday morning you are notified when a new episode comes out. It's always my goal and my aim to just get the very best in front of you. And all you're looking for is one little nugget, one tweak, what mindset shift. What can you take that you've heard Nizan share with you on today's podcast? And how can you apply it to your business? I always talk about speed of implementation. Take something and implement it in your business, learn from it, improve it, and keep going. So with that being said, guys, have an incredible day, and I look forward to connecting with you on the next show. Take care.
Hope you enjoyed that episode. But before you go, I've had a lot of people recently reach out to me wanting to learn more about Ascend, wanting to understand how the mastermind component works, how the coaching relationship works. And so right now we're actually on a waiting list. But what I would encourage you to do is, if you think you're the right fit and you think you could benefit, from being a part of our community, head over to ascendyoursuccess.com, watch the short video, and then just click the apply to join button below. And then we'll be in contact with you if and when a spot opens up. So really appreciate you listening to Flip Empire here. And I look forward to connecting with you on the next show. Take care.